I'm Dan Fitzpatrick at Stock Market Mentor, and this is Tesla. At least it was last week. This is last Wednesday. This had been drifting higher, higher highs, higher lows within this channel, and you can kind of see how these moving averages, the red is the 50, the blue is the 200. You could see how they're clustered together pretty good and also drifting sideways. So you can say, well, yeah, but the moving averages were clustered together here. Yeah, that's right. It was a crossover. Okay, big deal. Same thing here. They're clustered together. Oh, yeah, that was a crossover. Big deal. I don't care about that crap. Oh, but isn't a 50, 200 crossover important? Not really. You're kind of late one way or another. What I care about is when they are clustered together flat, when they're both trading flat, that tells you, like, think about the 200-day moving average as the moving average that institutional traders look at. It's basically something where if an institution is interested in buying a stock, if they want to buy the stock, then every time it pulls back to the average price that it's been over the last 200 bucks, that's really when they're going to kind of buy it. If, on the other hand, they're not really interested in it, then it's going to go down to the 200-day moving average and just keep on going. That's just kind of the way, that's the way things work. And so when we see the 200-day moving average, that's the blue line, starting to hold the stock. Back here, see, nobody wanted it. And then it starts to run up, starts to do this little congestion phase here. And then over the last couple months here, you see where the stock had been kind of trading around here. This is really institutions nibbling here and there, but not just buying the snot out of the stock. Meanwhile, for the retail investors, you know, hope springs eternal and all that. There's always going to be a market for Tesla stock among retail traders. Just like when Doge was in full bloom, you know, all the folks that were driving Teslas that decide they're going to switch to Priuses or the Leaf or whatever it is, they're going to get back at Elon for all that stuff, or by God, I'm going to sell my stock, whatever the case may be. Okay, don't let your emotions or your hatred or love for somebody dictate your investing or trading strategy. There's no other way to say it. It's just freaking stupid, okay? We're talking about money, not feelings. Your finances and your feelings, the only time they have a relationship is typically the time when you're in trouble. So, no, we don't do that. We trade technically. So, right here, this stock, this was last Wednesday, is just kind of grinding around. I was looking at it here. I was kind of waiting for a signal for the stock. And I'm just telling you the truth here, waiting for the signal for the stock to break out. Okay. I don't know what I was doing on Thursday, but I didn't see this. I just didn't look at the stock for whatever stupid reason. This was the signal to break the breakout signal right here when it broke above Monday's intraday high of 358.44. So right, we'll call it 360. Right when it broke 360 on volume, you could see heavier than average volume. Right when it broke 360, that's when you can say, okay, well, I can see how this uptrending resistance line has been broken out to the upside. This is what we want to see, right? Okay, so then the next day, again, I didn't see this, just to be candid. Should have, but I didn't. Boom. I didn't actually see it until this stinking thing was up at around at around 190, or excuse me, 390. This is our active trade list right now. I'll just go ahead and show you. 394.93. So I know I have my stuff here. Yeah. So these were all the lines that that I'd been drawing here. So got this stock at 394.93 and then set my stop down here, which was just below Friday's intraday low, a little bit before then and a little bit below the 8-day exponential moving average. So this is what happened on Friday. What I didn't know, of course, what was this movement. was most of it was like, well, I bet all of it was caused by Elon buying $1 billion worth of stock on this day. And it wasn't just his billion that moved it, it was the billion that started this stock moving in the right direction. And then all these fine folks that actually were watching the stock as opposed to weren't watching the stock, like me, they started piling in here for whatever reason. Don't even know, right? And so the stock closes then over the weekend, or maybe, I don't know, it was before the open. Musk files a report that says, hey, by the way, I tossed a little money into my stock, just $1 billion is all. So then the stock pops up here. It hovered for a while, but not really for very long. And so the thing is, I want you to think about this for a minute. So the catalyst for this move was undeniably the the actions of Musk, the $1 billion that he put to work. That was the reason for this move. Now, is this the type of thing that is going to be sustainable? Is this the type of thing where it's just going to keep moving higher and higher? I don't think so, at least not in the short term. The reason I say that is because Musk didn't file a report or a form or whatever saying what he was going to do. This was all in the past. This was down here. So the only buying, the only follow on buying here today was for those stupid people who shorted, who were short the stock. That never works out with respect to Musk. And also, those retail traders that are just eager to get in on the upside here at 420 before everybody else realizes what happened. Of course, everybody did realize what happened, which is why the stock gapped up this high. So my point for this is understand what the catalyst is for a stock that moves like this. Sometimes, by the way, there won't be a catalyst. No published news. It's just for whatever reason, money's coming into a stock. That's fine too. You got to love that. But you need to know. You don't want to be scratching your head too much, wondering why a stock's doing what it's doing. That was as I mentioned, that was the case actually with Tesla. I just didn't know exactly why this stock was up like this, but I decided it would kind of be a good thing to buy it. And so that's what we did right at the end of the day. And then today, when the stock gapped up, I'd also sent out a note saying, like, hey, maybe you might want to take a little profits. You don't have to sell the whole thing, but maybe take a little bit of profits for what turned out to be like 25 minutes of effort to buy the stock late on Friday, sell it early Monday. That's kind of a good trade. So anyway, that's what I did. That's what we did. And that's what you should do. So if you haven't been a member of Stock Market Mentor before, come on down, $7. I guarantee you're going to make $7 back in 14 days. Come on. If you're not going to do that, then I suggest that like you got to log in to do that. All right. So check it out. I promise you, you will not regret it. I promise you that too. So I will see you next time.